Hello Phil, welcome again to Blue Notes and thanks for coming down so quickly after the RBA decision today. Perhaps slightly unexpectedly, not totally unexpectedly, they did cut rates today. They had been intimating that there would be a period of stability, right up to quite recently. Has something happened out there in the economy to spike this change of mood?
Look, I think there's a lot of things that have got a little bit worse in the global economy over the last few months, and bear in mind the RBA board hadn't met for 2 months over the Christmas New Year break. We've certainly seen the oil price fall materially. We've seen other commodity prices come off. We've seen Europe face into more turmoil in the euro and potentially another dip back into recession. And even one source of strength in the world economy, which is the US, probably a little bit slower growth in the last quarter than we'd seen in the previous two. So, not all of those things necessarily meant that the Reserve Bank had to move on interest rates this time round, but obviously they've looked at the sum total of that in terms of the outlook for Australia and felt that a move at this stage is prudent.
As you say, that's a sort of global scenario and you can understand the reasons for anxiety. It's an Australian decision. You run the Australian bank here. Are you seeing particular sectors where that RBA concern might have been focused?
Look, not particularly, and I don't think, we're talking relatively small movements in interest rates that are already at 50-year or more lows. So I don't think we should hang too much on interest rates at this stage of the economic cycle. Yes, there are some sectors of the Australian economy that face issues, and collapses in the commodity prices, oil prices and so on have obviously had a concentrated effect on one or two sectors, but of course they've been very positive for other sectors. And if, looked at in aggregate, I'm surprised by how many businesses say things are going quite well. And certainly a lot of the customers we've spoken to over the last couple of months fit into that category. They don't necessarily have the confidence to go out and make new investments, but they seem to be managing their costs well and managing their business operations well in the current environment.
And as you say, financing costs, interest rates are very low anyway. There's no sort of stress there on the interest rate front. So where would you be looking to see if this latest cut is having an impact?
So, as you say, financing costs for most businesses are low, and corporate debt levels are at very low levels. They're easily at 20-year or more lows. And as a result, it's not so much the relief from interest servicing costs that we're going to see this flow through. And I think it's more about trying to engender people to take more risk and make new investments. So what we would be looking for as an outcome of these sorts of changes is, has business confidence improved? Are businesses actually starting to make more investments, build new plant capacity? And one would hope that things like lower input costs, the dollar obviously helping particularly exporters and import replacement industries, and whatever small advantage you can get from a small change in interest rates, all of these things going into an overall mixture of a business sector more likely to make investments and make them at a higher level than they have for the last year or two.
What about the downside risk of a rate cut? And the most obvious one is concerns about an asset bubble, particularly in residential property. Do you think that'll be exacerbated by that?
Look, I think that has been a concern, and I think last year we saw both the regulatory authorities and the RBA raise these concerns. The whole principle of having lower interest rates is to encourage people to make investments, and I think there was a frustration that most of the investments that were being made with cheap money were into existing stock of housing and the existing stock of investment assets. And yes, that always happens to some extent. What I think has been frustrating the RBA and policymakers more generally is we haven't seen that investment then go into new productive capacity and new industries. And I'm sure that the RBA will be very keen to see that happen.
Thanks very much again for your time, Phil, straight after that decision.
Thank you.